we're going to go into fintech disruption, right? So talking a little bit more about other fintech technologies that you might not know about. Now, Lise, I want you to give him a huge round of applause. He's got 30 years in IT, and not only that, he's worked for TIBCO and Microsoft as well. And he's also a huge believer in an IT future of platform as a service-based cloud applications. Right here to demystify fintech in the SMAC era. He's going to tell us a little bit more about that. Darien, Nagle.
All right, great. Thanks, Matt. Hello, everyone. Welcome back after lunch. Lunch was good. You all came back after lunch. Conference must be good. So we're good. Yep. So as Matt said, my name's Darien. I'm based locally here in Malaysia. With a company called Droma Digital. I'll just get that out of the way very, very quickly. We are a strategic cloud consulting partner, and so we consult on public cloud every day, in particular Amazon Web Services and Microsoft. A little bit about me, while I would be standing here today. So I spent about 15 years with Microsoft, 10 of those were here, managing the specialist team in Microsoft Malaysia, and so my customers, of course, were all the banks here. I spent 5 of those years in Australia managing the public cloud for Microsoft, of which my customers were the big banks in Australia. I spent a little bit of time in TIBCO, very big financial services company in the early days, and most of the customers there were financial services customers, payments, insurance. So even though I've been in IT for kind of 30 years, most of that time's actually been with financial services, and now in recent years, fintech. You might have seen the star logo up the top of the page there. When I first came to Malaysia, I helped manage a little website called thestar.com.my, or the Star Online. I'm sure you've all visited that. We moved that from actually Linux to Windows, which is one of the reasons why I joined Microsoft. And if you still read the Star today, then if you have a look at Monday's columns, I tend to write the occasional article on all kinds of things in the tech section. So you might see my name inside there. Okay, so we're talking about demystifying SMAC and why you would use it. Certainly in fintech, my view from looking inside, not entirely my view originally, but certainly something I agree with, is that these are kind of the eras of fintech, or the layers of fintech that we all have to work on. We kind of saw some of these slides earlier. So international banking, first the connection of banking is probably in the 70s and the early 80s. This photo here is a shot of a system that's used in financial services. It's a PDP-11. It's sitting in my dad's driveway at home. Most people have piles of wood in their front yard. My dad's got a PDP-11. Having said that, that's probably a little bit new. A lot of the processing in terms of international monetary transfers is done using tandems, actually, if some of you have been around for a long time and still is. And then that was quickly followed by digital training analytics, particularly coming out of downtown Manhattan. And the company that I then worked with for a short period of time, TIBCO, was prominent here in that they automated training through protocols like Rendezvous and stuff like that, where we were able to do real-time, very, very fast integrated training on the shop floor. Companies like TIBCO were very successful doing that, and then something called an enterprise service bus, which is still in use in banks today, to integrate many of those systems. These types of systems will be the ones that we'll be connecting to when you build fintech applications. And then, I've put 2004 to 2016 here, but we're in the SMAC era. We're right in the middle of it. I'm not saying by 2016 we've stopped. We're not. We're doing it right now. We're carrying on. We're right in the heart of that. So part of my job today is ensure that we leverage the SMAC technology for the applications that we build. And then beyond 2016, you've already seen all the interest about blockchain and so forth and so on. Your guess is as good as mine. I don't think we're finished with SMAC yet. And so consequently, any guess as to what the next era is going to be. So these are kind of the layers. SMAC kind of sits on top of the enterprise service bus and sits on all the international, on the international banking. So that's the technology that we've leveraged over the years. Okay, so SMAC, what is it? Before I do what is it, why do we use it? Because no one builds anything anymore. If I'm going to build an application, we're not going to start from scratch. We're not going to buy some servers, write some code, write something in Java, get all the hardware, buy all the hardware. In the early days, we used to have to ask venture capitalists for the money to buy the hardware so we could start something. You need 200,000, 300,000 before you get started. No one does that anymore. The main reason we're all using SMAC is because we don't need a capital investment up front. We can start right off the bat, and we can focus on the application, the value of the application, not on writing the code. That's why we're all using it. In terms of the definition of each of the parts and how they work in fintech, well, it's not complicated. So the social elements themselves are, you can think of social as using it to support your application, or you can think of social as a platform to build it on. For example, already there are applications that support micropayments within messaging inside social apps, as an example. So your app might leverage completely the social side of it all, maybe less of the other parts. So it could be that. You could use it as a feedback mechanism, how you're tracking feedback for Facebook, for Twitter, etc. So there's lots and lots of different angles you can use social for. Mobile, everyone's got a phone. Unquestionably, your application's going to integrate some mobile part. But I want to say that these things are all connected in that you don't just focus on one of them. So, for example, if we're talking mobile here, I'm not going to build a mobile application from scratch. The public cloud vendors on the right-hand side have services in them that make building a mobile application really fast. So you don't have to do any of the infrastructure and plumbing. Same goes if you're leveraging social. Those types of integration points and those APIs are actually provided by the public cloud providers on the right-hand side. So it's not as if they're separate parts. They're kind of all integrated together. Excuse me. Analytics, amazing. How many of you have used Google Analytics before? Just show of hands, a few of you. Yeah, amazing. You can use it on a website. You can use it for feedback. I'm not pro any particular technology, but these days you can track how your application is going, how successful it is, amazing amounts of data without having to invest in any of the analytics software. A few years ago, that'd be millions of dollars of analytics software just to track how your application's going. Now I apply to Google, make an application, the free tier gives me something, I pay a little bit more for an extra tier. I can track amazing statistics without putting in millions of dollars worth of hardware and a lot of expertise. Lots of analytics options available to you. Those who have business pages and things on Facebook would be able to track it on Facebook Insights. And there's online training if you don't know how to use the thing. Free online training if you don't know how to use the thing. The barrier for entry into building these applications just slipped almost to zero. 10 years ago, if we're having this conversation, be like, oh gosh, I need money for this, I've got to do that, I need training, I need stuff. It's not. We can just get going with our idea incredibly quickly by leveraging these particular services. On the analytics side, even if you'd like to dig around yourself, the world's most popular BI tool, Microsoft Excel, sitting down there at the bottom, you can upload data, you can offload data and do analytics and things yourself. So you don't need to be a domain expert in these particular areas. On the right-hand side, cloud. I'm very specific here. I've put public cloud. I haven't put private cloud. I haven't put hosters. I've put public cloud. And in particular, I've chosen 3. Certainly the top 2 and another contender who's coming along. Here's the reason why. Public cloud isn't just virtual machines in the cloud. It's not that. It's a whole range of application services that these vendors up here provide. It's these types of application services that enable you to build applications really, really fast. I hear the term, well, private cloud's better, right? Because at least we have control of the data and we can do some things around private cloud that we perhaps couldn't do in public cloud. Yep, I'm going to talk about these particular points later. But very specifically, SMAC means leveraging the public cloud. And so the vendors, Amazon Web Services, AWS, Microsoft Azure, and Google Cloud Platform, these guys, do you know that they own most of the world's computing power? Do you know that? Like if the numbers of servers that they buy, I think it's something like a third of the servers in the whole world on planet Earth they own amongst these three guys. Absolutely astonishing compute power in these particular vendors. So there's no end of compute power available to us if our application becomes successful. How troublesome in the past was it if the web application or the mobile application suddenly had more hits and we couldn't accommodate it? Certainly in these days that we could. All right, good. But if we're leveraging public cloud, what's the problem? I could pick on anyone here. I've just picked on Microsoft. I've got Microsoft Azure. Where's the nearest data center? It's down in Singapore. It's up in Hong Kong. It's not here. No one has one here. Oh, well, that sounds great, Darien, until you said there's no data center. No, there's no data center here. So if we're going to leverage public cloud for something, we've got to do it out of the country. Oh boy, here we go. Here we go. Financial services, fintech, and data out of the country. Oh boy, nah, I got to scratch that completely off the list. There's no way I can do any of those types of things. Just hold on, hold the thought. There are some architectural patterns and there are some things that we can use to overcome that. But yes, it's a good point. The nearest data centers are in Singapore. I will tell you this though, all of those cloud providers, they also have content delivery nodes here in Malaysia. So while there isn't a data center in most of those cases here, we can actually serve content directly from endpoints in the country. So that's something to consider. All right. Why would I put my data, my app, my trusted app in somebody else's data center? Is somebody else's data center more secure? How can I trust them to look after my data? This is a really common question. This is a question that everybody asks. And the answer to the question is, these vendors know that that's the question, and so they go to extraordinary lengths to certify their data centers in security and procedural compliance over and above anything I've ever seen any customer do in their data center. I've never seen a data center with this amount of compliance other than these particular vendors. So what's the point I'm making? Are these guys actually more secure than what your data is on-prem in your own data centers that you can touch and feel? Maybe the answer is yes. Does that give you any more comfort running these types of sensitive applications in their data centers rather than your own? No, it doesn't. But there's a huge amount of effort that goes into certifying them. If I drill down and have a look at the financial services specific global certifications that they go for, we can have a look at them here. Now, I've picked on Microsoft in this particular case. It's the same for AWS. When you see a certification up there, it means that all of the global data centers are certified for the same level. So it's not as if it's independent, and it's usually across most services. So if I have a look, FISC is Japanese. It actually talks about running banking applications, crazy talk, running banking applications in the Japanese data center. Big move there forward. You know, the day I see core banking moved into the cloud, which I don't think is going to ever be, will be a really big day. But this certification talks about running banking applications, things like loan origination systems and so forth, actually in the Japanese data center. Anyway, I don't think anyone's done it yet, but there's a certification for it. So you can tell where we're headed. Second one's the IRS. That's not for us, that's in the US. The payment card industry, PCI, we've seen this mentioned before. All the data centers are compliant with PCI. So if we are processing payments, then we have a certification for that and a level that goes with that. That's pretty amazing. And then SOC 1, 2, and 3, which you can see up here, are from the Certified Practicing Accountants in the US. 3 levels of extremely stringent accountancy certifications, which probably cover us as well. So there's a plethora of certifications that goes with both of these providers. We've got some guarantee that in terms of financial services, there's been a lot of thought and a lot of effort about financial applications running in public cloud. And in both cases, in fact, in all cases, there are some great case studies of people using sensitive data and using it with public cloud. Okay, so hopefully there's some reassurance there. I don't talk to the regulatory authorities directly, but I hear a lot about the regulatory authorities from my customers. I'll start on the left-hand side. The left-hand side's APRA. APRA is the regulatory authority in Australia. I would say this about them. So this is feedback from my customers. I'm getting it secondhand, but I've heard common feedback. Regular authorities, when you have an open dialogue with them, are incredibly helpful to work with. This is what I've heard right across the board. So in the case of APRA, it's the 4 big banks. People ask me, customers ask me all the time, has APRA approved cloud to be a workload? Has Bank Negara approved cloud to be a workload? Can we do this with Bank Negara? I should say this about regulatory authorities. First, they never say yes. They say, no objection. It's not really yes, it's kind of yes. It means no objection. It means okay, up to you. That's kind of what it means. They don't say no either. They say nothing. So I noticed there's 2 things. So they won't write out say no. They'll keep a dialogue open. They won't say anything. They won't say yes, but they'll say no objection. So that means you need to carry out the risk assessment on your own. You need to demonstrate to us that what you're doing has been through due diligence and the correct risk. If you have demonstrated all of these things, we can say no objection. No objection means you're still responsible for your own data, you're still responsible for the security, you're still responsible for it, but we've seen that you've done your due diligence, we've seen that you've gone through the risk assessment, and so we have no objection. This regulatory contestability is something that I've seen in Australia. I've heard my customers, the big 4 banks, talk about it. And they've said, APRA insists on regulatory contestability. So we are APRA, we are the regulators, that's what the regulatory bit is for. Contestability can mean competition, it can mean comparison, the ability to look at things. So it's a bit like the mainframe of the old days. If I've got one mainframe and it went down, what would be the impact? All my eggs would be in one basket. In this particular case, when they're talking about cloud, they say, have you assessed for regulatory contestability? Are all your eggs in one basket? Is your architecture such a way that if there is an outage, it will cause impact? If you've done your correct architecture, then the answer to that should be no. So here's my view on the regulators. Darien's view, not anyone else's view. My view. After hearing what I've heard, regulators are open to having a dialogue about cloud. I wouldn't be picking up core banking anytime soon and sticking it in the cloud. But for fintech applications, which are multi-tier applications, as long as there's not any big inherent risk and the communication channels are open, and they are, then you should be able to get a no objection from these types of workloads. Okay, interesting. No clear answer. Here's an amazing thing about public cloud. Public cloud has lots of figures with 9s in it. So I'll give an example. Look at this. This is for running virtual machines in the cloud. This is for running virtual servers in the cloud. Have a look at this. AWS will commercially reasonable efforts to make Amazon EC2 and EBS each available with a monthly uptime percentage of at least 99.95%. Wow, I don't get 99.95% in my data center. I never had 99.95% in my data center. I probably had about 83, 84, something like that. It's hard to keep IT infrastructure up. Brilliant, brilliant. We're going to ship everything to the cloud because the cloud gives me 99.95%. That's not what it says. People think that's what it says. That's not what it says. A service level agreement is a promise. It's a bit like in your car, in your house, when you back out in the morning. It's like, I promise not to hit my neighbor's car when I back out. Doesn't mean you're not going to do it. Maybe I didn't sleep well that morning. I back up, whoosh. I hit the neighbor's car. What do? You run out, you go to the neighbor, sorry, I hit your car. That's what happens here. It's the same thing. Doesn't mean they're going to do 99.95. It means we're going to try. It's just a promise. If we don't, we'll give you some money back. You will be eligible to receive a service credit. That's the sorry. I dented your car. So if we're going, I need my application to have 99.9% availability, I can't just use that because that's a promise. What if one day it's not? Sorry, and they'll give you some money back because it's not the thing. Interesting, hey? We still need to architect things with an application in such a way that it allows for downtime, even though the figures of the public cloud look so great. You with me? Okay. I want to talk about something else too. What if, you ready? You're going to like this one. What if I've built my application in the public cloud, something happens, something bad. It's not my fault. It was the cloud vendor's fault. Something, storage, backup went down, position of the moon, something. Anyway, it resulted in downtime and loss of data. Well, now there's a problem because not only have I got downtime, but I've got loss of data. It's damaged my reputation. It damaged the clients that I'm working with, the throughput. It damaged it so much that there were financial losses involved for the downtime. There was financial losses for me for the business. There was financial losses for the customers as we processed it through. Right, I go. I've got my 99.95%, so I'm going to get some money back from that. Incidentally, when you do get the money back from that, they calculate exactly what virtual machines were impacted by what particular time, and you get a credit for the time that's down. So maybe you spend, I don't know, a few thousand ringgit with them a month, and there's an outage, and you get an email back and it goes credit for the outage. You think that's a winner, and it comes back $2.68. Because that was the actual impact, that particular virtual machine, and that's why it was down. It's calculated, but trust me, it's not going to be what you think. So I'm there with my $2.68, and I'm going to go, right, what's the liability now of a public cloud provider? Now, to be fair, I've put AWS's up here, but Microsoft's is similar, and Google is similar, and some of the large public cloud providers, they're similar. But it's a legal statement, so similar is not good enough for legal, so I'd recommend you get exactly their liability statement and download them. When you sign up for the service, you agree to this. You know what I mean? I want to use the service, I agree. But you've all agreed. You know? It's like in the old days when you open the software packet, you agreed to all the licensing terms. Right? Well, I didn't really, well, you have. So that's it. So it's a standard agreement. Watch this, guys. We and our affiliates or licenses will not be liable to you for any direct, indirect, incidental, special, consequential, or exemplary damages. Neither we nor any of our affiliates or licenses will be responsible for any compensation, reimbursement, or damages. Ouch. Ouch. We signed that when we signed up for the service. Gets worse, wait. This is talking about if the data is damaged. Any unauthorized access to, alteration of, or deletion, destruction, damage, loss, or failure to store any of your content or other data will be limited to the amount you actually pay us under the agreement. Let's just say I lost all your customer data. What's that worth? Don't know what that's worth is, but I pay them $20 a month in services. I can get my 20 back plus my $2.68, and I'm done. So what am I saying? I'm not saying cloud services are bad. I'm not saying that at all. I'm just saying that because they are public utility cloud services, they all have a baseline framework which doesn't let us be libelous, or guarantee SLAs. Now, if they were negligent on these terms, we wouldn't use their services. It costs AWS, it costs Google, it costs Microsoft a heck of a lot of money if they don't meet their service level agreements. And they certainly don't want us to be having these libel clauses. So they will do everything in their power to try to maintain those service level agreements and not hold down the liability path. But let's just be conscious. If we're mixing it with fintech, I can't lean on them to bail me out when something goes wrong. You with me? Okay, good. Now I've scared you. I'll bring it all back. So, given that, we need to architect a solution that balances this approach. And so, if I was doing a mobile banking application today that we all know and love, this is how I would architect it using SMAC. So over here on the left-hand side, it's a mobile application. So I would use the public cloud mobile application services. That's in the center there to help me accelerate the development of the mobile application. I don't want to write mobile code and authentication and access control and all that rubbish. I don't. I can use the public cloud, which is in the center, to do that. Then I can focus on the business logic of the mobile application. That's great. Also on the left-hand side here, I want it to be browser aware as well. So I'm going to leverage the public cloud services to create websites for me that I don't need to manage or update or do anything that I need to do there. So I can very quickly use templates and serverless computing and build a website very, very quickly. And then I'm going to use the public cloud services again, bottom link there, Facebook and Twitter, to give me social feedback via Facebook and Twitter. Where are the public cloud services? Well, they're in Singapore. For us, they're in Singapore. So I'm running all this out of the Singapore data center. Here's what I do just to make it a bit snappier in Malaysia. I'd make sure that I've got a content delivery node here in Malaysia so that when I load my website, it loads up fast and at least it's cached locally. But here's the problem. Where's my data? What's the thing I need to access in mobile banking? Well, it's sitting over here. Here's a brand new Z series, sitting over here, glowing green, the mainframe glowing green, inside the bank's data center. I'm not moving that. I'm not taking that anywhere. I'm not putting customer data inside the cloud. In fact, what am I doing is, the center part here, I'm doing the website and the transaction, and I've got my mobile app. When I click on my mobile app, deduct or transfer, what happens, the Singapore data center reaches out to the local data center through a set of APIs here, makes the request against the mainframe. Mainframe, we've got Enterprise Extender on it. They all speak TCP/IP these days, no problem. Gives me acknowledgement back to the transaction, acknowledgement back to the cloud, which gives me acknowledgement back to the mobile app on the front. Where was the data? For a small period of time, it was securely encrypted and passed through the cloud. But for the rest of the time, the data stayed in the data center. Didn't move. You with me? So I've got my customer data. Excuse me. I've got my customer data. I've got my customer transaction records. And really all the cloud is doing is it's calling an API. The other thing is this. In terms of latency, because it's a single transaction going through, I can have a high-speed connection. That's that dotted line at the top there. I can have a high-speed connection that actually goes from the bank's data center to the cloud, so I get guaranteed latency too. So the experience is going to be pretty good. So here's a mobile banking application that's containing really sensitive data, your own bank accounts or whatever, and we've leveraged the public cloud to put it first. Yet the data that's important has stayed on-prem. This is called a hybrid approach. Probably 90+% of fintech type applications use this pattern, use this approach. And so we're only looking at data in transit. And if we're looking at data in transit, I just need to worry about end-to-end encryption. That's it. You can enhance this pattern by caching data or doing things that are not so financially important and putting them in the cloud. But you can simply say, at no time does my application store any sensitive data in the cloud. Is that okay? This, as I see, probably for the next, I don't know how many years, 5 years, 10 years maybe, is the architectural pattern that's going to allow us to get around the regulatory requirements of not storing really important data in the cloud. And yet we can still leverage it to do our application development very quickly. All right, I'm going to give you another example. I'm going to give you a crazy one. This was a POC I did. It's crazy. It's a POC. You guys are like, if any of you in financial services, as distinct from fintech, you guys will love this. This is crazy. So I've got an Australian bank, one of the big four, and they had contractors in India that needed access to the mainframe. These contractors could work from home. And so they were given iPads to work on. They wanted to use, actually they didn't want to use public cloud, they wanted to somehow give these contractors access to the mainframe with reasonable response time on their application. Check this out, this is crazy. So they did this. This was a POC, they did this. Here's our Z-Series mainframe. They had Active Directory and stuff run online for authentication. They made a connection from their mainframe directly to the cloud, in the cloud data center. Now, in this particular case, they routed it so that the application that did the access was in India. So they used the Indian data centers. And then they built a desktop application which used a terminal emulation client. Do you know what I mean? Some of you guys, I'll tell you. So when you go to the banks and you go to the teller, remember them? And the people on the machine, go to the teller, the people, and they log into your account, they use a terminal emulator, right? To talk to the mainframe. We're still all running COBOL here, team, in Malaysia. There's still COBOL developers alive and well. It's all good. Nothing wrong with that. So anyway, then they log on. That's a screenshot. That's a real one. That's a screenshot of like a mainframe screen with options. You know, and over the years, all the tellers remember the combinations, right? The tab 3 for this, 4 for that. They remember all the combinations. No mouse here. No mouse allowed. So what happens is, amazing stuff. What happens is when they open up the application on their iPad, it connects to the cloud, which is their Indian. In India, it connects to the Indian data center, which is very fast because it's nearby, and it opens up a terminal emulation client. That's all the cloud does. Then, through authentication, the terminal emulation client hooks up and makes a session with the mainframe. We authenticate it and do what we need to do. Then, because the latency from Australia to India is pretty high, it's about 400 milliseconds, the terminal will draw on the screen. And so they're accessing across secure internet the mainframe using a public cloud service. Crazy. Where does the data go? Data never left. The only thing we're moving across here is the screen and the clicks, the 1, 2, 3, tab, 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 as they go down and open the particular things here on the screen. That's all we're doing. And yet we've hooked up to a mainframe. You with me? So there's an extreme, probably wouldn't recommend that, but because you guys might find that interesting, I gave it an example. There's an extreme example of the application pattern where we're taking core banking data, we're actually exposing it out to the internet, but really we're not. Because we're just moving the keystrokes and the terminal emulation strokes out there, and the data's not stored in the public cloud. Okay, very good. I wanted to open the floor to questions. So my email's up there, but you notice there's a Skype for Business next to that. That's because you can ring me on my email. You know, the modern email, that's all you need. Like, I've got a phone number, but that's kind of not cool, so I want to do a little bit fintechy, eh? So the Skype for Business is actually up there where you can ask me questions, and you can ping me online like chat, like secure chat. So that's why I've got it up there in the Skype for Business logo. So I wanted to open the floor for questions. So first I'll say thank you very much